Investors, of course, may be stuffed from Turkey, but let's stuff you now with real focus on how to bring some holiday cheer to your portfolio. There's no better person to give us a holiday investing plan than Mario Gabelli, GAMCO Investors Chairman and CEO. Huge question marks hang over this market between now and the next couple of months. But as we finish and look at the macro picture here, the question marks are ISIS, the Federal Reserve, and whether it will hike rates in December, just a few days from now. We've also got a quiet consumer or a questionable consumer. And on top of that, should we invest in stocks or not?
Wow. You got a long Christmas list.
Man, I hope you have a good memory.
I can remember all of it. But a year ago, we were worried about Ebola. Now we're worried about ISIS. Well, we should have been worried about ISIS 3 or 4 years ago. And
okay, but we weren't.
You will have an election in 12 months, and maybe we'll have a different approach to handling global issues. But that's an ongoing issue.
Okay.
With regards to the consumer's balance sheet is at an all-time high. $100 trillion. His debt is $14 trillion. The two areas you worry about, Liz, student loans and subprime for cars. So the car sales, which are going to be vibrant in November, you have to worry what's going on underneath. With regards to the consumer, gasoline, that is food and fuel prices have come down sharply. Their after-tax spending is doing well. Wages are rising. Jobs are more plentiful. I think it's going to be a very merry but subdued, practical Christmas. But everyone is telling me, including those that I watched around Thanksgiving, they're shopping online.
They are shopping online. In fact, the breaking news is that they're having a record Cyber Monday right now. That is a good thumbs up for the consumer's health. But as you look at the stock market, you've always been a bottoms-up research guy looking at individual stocks. You fly to companies, you check and see how they're doing their business. You do all of that.
And we still do that. And that's the best part of the business. Passion, intensity, focus, and profits.
Okay, and what are you passionate about right now? If we're looking at the retail world, and you had said this isn't the diamonds, of course, we're getting Blue Nile CEO in just a few minutes. You've got to hear how well they're doing, but you've got diamonds of a different sort, do you not?
Well, everything is a precious stone. And sometimes they're in the raw and they need a little nurturing. So we've always said, hey, for the last year or two, starting last year at Thanksgiving when you had the Thanksgiving Day oil massacre, let's look at the users of energy and how they benefit. One company in San Antonio has not done as well, but it's done extremely well, but can do better, is CST. They are a convenience store where you go in and get gasoline, you have money left over, and you're spending stuff on other goodies that they sell. Casey's has done extremely well. Musa, Murphy USA, Sunoco. So there's a cluster of these companies that are ripe for...
and to that end, if you then do the actual, I guess, broaden the aperture here, you're looking then at cars and how well they're doing and auto parts guys.
Yeah, well, cars are kind of peaking out, and that subprime does bother me. I mean, just a lot of issues that I'm concerned about as to incremental production and incremental sales in the U.S., but not Europe.
But both these names you have said you've liked in the past.
Well, AutoZone, O'Reilly's, Pep Boys, Genuine Parts are kind of an advance, are those that are selling parts to either do-it-yourselfers or do it for me.
And you like that?
Yeah, I've liked that. Genuine Parts, Liz, I fell in love with in 1967 when I first visited. That's the NAPA stores. So I don't love them and leave them. They basically are a great nurture, but they've had some headwinds due to currency.
The stocks. AutoZone's up 36% year over year. O'Reilly's had a wonderful run too. It's up 47%. You still think there's more upside to these names?
Well, I think the category, like Pep Boys, which we owned a lot of, in which we were trying to get the company to split the company itself in two parts, they decided to sell out. Both of these companies that you mentioned, AutoZone and O'Reilly's, have been basically taking incremental cash flow and buying back stock. So to the degree that wants to say that even God rests after 7 days or 6, we want to rest on the stocks and we want to move on.
Right. And what about January? Because you've talked a lot about how right now, folks, people may get nervous and they may sell off the stocks, obviously, but
they'll sell
January's a bounce.
No, do it another way. The practical side of the individuals that are taxable, that is the individual investor, he says, am I leaving a tax year with realized gains and unrealized losses? So they will sell stocks that have losses in them to neutralize the out-of-pocket cash. And in January, in quotes, the January effect, some of them bounced. Now, a lot of the selling by institutions take place a little looser.
Mario,
so what would be on my basket of things to own for the next 2 or 3 years? If the Saudis were to ever blink, you get a company like Freeport, FCX at $8. I would say that's
cheap.
You could buy a lot of diamond rings with that.
And we've got a political atmosphere, too, and there's some breaking news on what's going on in Washington, D.C. We have that for you right now. House Speaker Paul Ryan is formally inviting President Obama to deliver his State of the Union address before a joint session of Congress. The date, January 12th at 9 p.m. You know, there's such discord between the Republicans and the Democrats. Is that great for stock picking? People often say that that works.
Well, there's a notion that a dysfunctional government doesn't work. On the other side of the coin, we need to keep America as a leadership role, both in the economy and in terms of job creation. Liz,
Mario.
Inland waterways, barges, bridges, roads, that infrastructure bill has to be done.
It's got to get done.
And it's got to be financed.
And
it's nice to pay lip service to say the roads suck and are bumpy and that you can basically go ahead. We are buying the companies that benefit from that because we think it's got to happen. 40% of our 500,000 bridges have D-. What are we waiting for?
I know. Put people to work. Do it. And speaking of...
more better jobs and more fundamental, it solves the cost of inefficiency in our system.
Okay, speaking of grading, you got to give an A+ to a lawsuit, at least for the drama factor, on a stock that ever since Mario has come on this program, he has always loved, and that is Viacom. This is interesting. It broke on the day before Thanksgiving, but it is still very much a story. The steak and sex lawsuit. This, of course, involves a former companion of Sumner Redstone, the chairman, Manuela Herzer. She was his girlfriend. She's been kicked out of his mansion. She says she should be in charge of his health. He's 92 years old. And what do we have here? She has a lawsuit that she's filed to get back into his inner circle's good graces. She wants to be a part of that. She says he cannot have real mental capacity at the moment to run Viacom, that he is, and these are quotes, he's a living ghost. He cannot converse anymore. He only grunts. He has crying spells, and, quote, he wants steak and sex daily. Does this hurt the stock, Mario?
Well, yeah. You gave me a lot of interesting, in quotes, page 6 type news. From my point of view, I followed Viacom since 1973 when it was spun off from CBS. The stock is selling at 50. There's 400 million shares. That's a 20 billion market cap. You got 12 billion of debt. And I think they need a jolt to overcome the notion of over the top.
Steak and sex is a jolt, Mario. I don't know. Is it a jolt in the wrong direction? If you had to pick between that or the spun-off CBS run by Les Moonves, which would you pick?
Well, I pick them both. And Les Moonves has done a great job, and Philippe Damon has to do a little bit more on the programming side to keep himself more relevant.
So this doesn't hurt the company, you think, short term? It's down 5% since last Wednesday.
It is short term. I don't know the answer to that. I know that if somebody else were running either piece, or if Sumner was not around, we would have an interesting time frame in which eyes will be focused on financial engineering.
You're holding on to Viacom.
Well, we're holding on both Viacom and CBS, and we are the largest holder outside of the family trust with regards to voting stock. And
so
we're
this Hollywood drama doesn't affect your...
Oh, come on, it's fun. I mean, come on, a 92-year-old guy, and they call him incompetent, yet all he wants is steak and sex? Come on, Liz, be practical.
Well, you're saying what? He should, if it were Gabelli, you'd want gnocchi.
Vino and gnocchi. I was trying to figure out what gnocchi is.
Did I mispronounce it?
No, you did great.
Gnocchi.
Yes. Oh, I like that.
All right. He's holding Viacom. He's holding CBS. It's great to see you, Mario. Happy holidays.
And you too.
Thank you so much.
Plenty of things to cheer about in 2016, particularly after the election.
He likes stocks. Says go for it. We might see a January bounce. Thanks for sharing that with our viewers.
Delighted to be here.
All right. The Dow is still down 50 points. So Mario's and his opinion shaved about 6 points off the losses here.